Yes, all right, and we are back. Welcome everybody to our next session. So we've got a super great panel that I'm personally very excited for. And this panel is called Payments in Focus, Reduce Hassle, Increase Return on Investment. So we've got a group of experts here who's going to share with us the latest on automation, fraud detection, regulatory requirements, as well as keys to a smoother and cheaper payment processing system. Our moderator for this panel is Dan Lagemi, a consultant at BPY Services. Our panelists include Ilko, I'm so sorry if I'm mispronouncing your name. Oh, thank you, great, okay. Ilko Deddingmeyer, SVP Sales in the EMEA region in Nuvei. Michael C.G. Charalambides, Regional Partner and Director at Ecommpay. Violeta Misirkova, a Senior Business Development Manager at PaySafe, Aaron Gladman, CEO of Intercash, and Den Melnykov, co-founder and CBO of Corefy. Let's give them a warm welcome to the stage.
Hello? Works. All right, welcome everybody. So, very excited. We have quite a lot to discuss. I won't dwell too long on the introduction because it's been done already now. So let's just get started because we have pretty much a full 45 minutes back of questions. And ideally, I'd like to take some questions from the audience at the end. So let's get started. First, we'll start with a little bit of news from the payment industry, and then in the second part, we'll go with the more practical strategies and tips and tricks for brokers in order to help you with the payment processing. So the first question, PSD2. Wanted to have a little bit of feedback on the PSD2, and you know, we do have quite a lot of data now. It's been a while that it's been enforced. What's new with this, and what was the impact, the real impact on the finance industry and the brokerage industry? Maybe you, Ilko, to get started, and you know, after, if anyone want to weigh in.
Yeah, I can go first. Good day, everyone. So I think the impact of PSD2 on the financial industry is significant, right? It's definitely a change in consumer experience. As sort of the average transaction value in this industry is around about 300 euros. At least that's what we see. It's fair to say that most of the transactions need to go through strong customer authentication or PSD2. And that has got an impact, but it's actually quite surprising. Of course, we've seen fraud levels reduce quite dramatically. I think our data shows us around about 70% reduction in fraud ratio. But we also assumed that there will be a decrease in conversion because of the additional step. And what we've seen actually is quite the opposite. So we see an uplift in conversion, specifically more recently.
Really?
Yeah, so I don't know if it's due to the way in which we specifically manage 3DS, but I do feel that it's much more accepted now by lots of consumers.
Maybe it's because of the frictionless?
Yeah, we have a product around sort of Smart 3DS where we basically present where we basically present the best possible 3DS solution based on issuer preference. So we look at, is this issuer sort of more old school and still using 3DS 1, or does it need to go to 3DS 2? And we see quite good acceptance in that space. Then lastly, I think within the market itself, due to multitude of reasons, but we've seen that sort of the strong, dominant, well-regulated players grew dramatically, and others didn't. So either they consolidated or remained pretty flat in terms of volumes.
Awesome. Anyone? Aaron, one in.
Just to add a little bit around that, from my side of where I look at it is on the issuing side as an issuer, we've seen also fraud levels reduce dramatically as well. And also, having the impact of PSD2 allowed us to make certain changes that enabled a fraud reduction, but it's also a lot of work. There was a lot of working on the user experience. There's a lot of data protection requirements, and I think it allowed, at least on that side, definitely to see a great reduction in fraud, and it also discourages fraudsters altogether from making an easy attempt at using a financial service for fraud. So on top of the extra work we all have to put in, and I think you've seen a little bit of latency from a lot of issuers, especially like EMIs and the Revoluts and the smaller, more challenging style banks. It definitely took time, but I think we're all at a place where it allowed the fintechs to evolve and revolutionize a little bit the impact of that by enhancing the customer experience beyond what you'd normally see from a typical bank. So I think all around it will have a positive impact. It's just going to take time for both the issuers and the acquiring side to get a good balance of how to make that user experience optimized.
That's actually very interesting to have the perspective of an issuer. Do you see the issuing world in its entirety, I'd say, in Europe being ready for it, like V2, 2.0, even the latest?
To be honest, I mean, when this was dropped upon us, because that's exactly how it was done. And I think, if I remember correctly, in the UK, they had to extend their deadlines and their punishments, let's just say, or the consequences for those who didn't follow several times. Like I said, it wasn't an easy transition to be able to do this. And I think there's still a lot of providers who aren't ready. You have to offer several options from the issuing side so that people can do this biometrically. People can authenticate themselves via text message. You have to give them options. And all this is in the middle of a transaction. In an era where we jump into a taxi and don't even take out our wallet to pay, people are quite used to this frictionless payment, this payment, process. And when you're now introducing what is more friction, it's more trouble from the issuing side, because now you have to implement, in the middle of your technology, more steps. But it's also this new thing to a consumer for the first time they see it, which actually might scare them away and think, is this a fraud? Or what is this process? How do I go about it? And a lot of the issuers are just not ready to determine what their the way that their users go through a payment experience, because they're simply not on that side of the transaction. So it's a big learning curve for sure.
Great, thanks. Violeta, this one might be good for you. Let's discuss a little bit about the regulations and the scheme rules. So is there any upcoming change, whether in the scheme rules or any regulation, something new, in all of the jurisdiction, India, US, Japan, right. All of that. Anything that we should know about and prepare as brokers?
Right. Well, I couldn't agree more that the credit card industry comes with a lot of rules and regulations, of course, and to prevent fraud and to avoid big fines from the schemes to merchants and so on and so forth. The Visa publishes regularly Visa rules and regulations, as well as MasterCard, and a new thing coming now from MasterCard is the Buy Now, Pay Later platform, which is going to be like a pre-approved credit model, which will actually allow, it is about to come into life in the UK, Australia, and the United States first. And it is going to be, working with existing credit regulation to help merchants be successful in this space. As to regulations seen on a macroeconomic level, let's say something about the United Kingdom. The Financial Conduct Authority has published is moving forward with various pilots and proof of concept exercises in this place. And I think one of you mentioned that the date for the going live of the 3DC compliance in the strong customer authentication, it has been postponed for the 14th of March, 2022. This is the major fact that's coming live in the United Kingdom. Like moving forward, UK is of course a leader in the open banking space and will continue to comply with the EU regulations and to remain a global competitor, and will of course incorporate further technologies such as biometrics, for example. For example, let's take the US now into focus. There is no equivalent to the PSD2 regulation in the US. They seem to be, the Federal Reserve Board is the national competent authority, and they seem to be sort of happy with the way things are at the moment. So there's no really regulation announced yet. And this current adoption of neutrality, this position of neutrality, one could say that their position is considered to be more durable and flexible for future financial changes.
Mm-hmm.
As to Cyprus, maybe there are some brokers sitting here from Cyprus, they would be interested about that. The authority that is regulating the competent authority is the Bank of Cyprus. And the strong customer authentication has been publicly communicated with the enforcement date of 1st of January 2021. And I have some statistics. 87% of payments use 3D2 Secure already, and with an authentication success rate of 93% and 20% frictionless payments. As to China and Japan, the main thing here is the QR code usage. Both in China and Japan, QR is the alpha and omega, one would say, for making payments. So yeah, that's basically an overview of the regulation space seen from a macroeconomic perspective.
Great. Thanks, Violeta. So now I would like to speak a little bit about crypto because it has an impact seen in a payment scene. So, and maybe also another aspects of the crypto world into the payment and, you know, the DeFi, the decentralized finance. Is it true to consider that that would be the future of the brokerage industry in a way? Because it's going to allow a lot more coverage in a way. And the second part of the question would be with crypto exchanges. It's very easy for large crypto exchange to actually go and find mids, and that's not a problem. But when you're a small startup crypto exchange, then it's a little bit more difficult to find a home to get started. So what would be the right way to proceed? Michael, want to take this one?
Wow, cryptos and looking at me straight away. What's wrong? I don't know why he did this, honestly. So, thank you for giving me the chance to express my mind. I see I have 35 minutes to keep talking, so I'll just take it.
That's fine. We do have a few more questions, though.
All right, so jokes aside, connecting the dots, though, PSD2 and cryptos, I mean, okay, it's like talking from north to south. It's like the two opposites. When you're talking about extreme regulation to decentralization and deregulation. Well, I just want to address a few things about PSD2, and I would say that, one word, outdated. Okay, it did what it did. We've been talking about PSD2 for the past 5 years. I mean, I assume most of you come from the CIFs or the FX, or I can see even some people which are related to payment institutions and EMIs here. So PSD2 has done its job as much as it should. But I think it's got a lot of shortcomings. And I would say the biggest shortcoming and the biggest failure of PSD2 is leveling the playing field. I mean, come on. Did it really level the playing field with the banks? Did it give the opportunity to fintech companies to take it further? I mean, you guys are looking for innovative solutions, which we keep saying as fintech providers that you're going to have them through us. But believe me, the banks are giving us a very tough time when it comes to that. So even just by doing traditional trading in stocks, bonds, or I won't even say the word digital assets, you still have a problem when it comes outside the European Union. We have seen a big shift of the business because of PSD2 from the cards. I'm not saying it's at an equal level yet, but it's almost there. And I would like somebody from the crowd to actually, at the end of the conversation, to verify this. We have seen a big shift onto interbanking transactions rather than using card schemes. So because of the tough measures inflicted by the card schemes, but also because of this European solicitation from law firms towards traders to get their money back when they lose it, I have seen a big shift from the cards, from Visa, from MasterCard products directly onto the SEPA. So SEPA, in terms of PSD2, has actually been elevated, and I would say that today, at least talking from our side, is one of the major products that we're selling out in the market for European regulated entities. Now, when it comes to decentralized products, like you said, which has to do with cryptos or digital assets, then it's a whole new different animal. I think we should be talking about PSD3, because then again, shortcomings of this are small companies, you said, if they do have the facilities of large companies when it comes to cryptos. Well, I don't think either of them have the opportunity at the end of the day. They're both getting a big headache. I mean, we're getting correspondence from regulators that, well, you know what, we don't like digital assets, we don't like crypto companies, stay away from that, stay away from this. When there's an audit, where's the crypto companies onto your company? Oh, come on, I mean, is it illegal? No, but I don't want them. So, again, whether it's a large or a small company, the only country or jurisdiction that actually gave a bit of flexibility to this is the United Kingdom. But then again, I don't know, we kicked them, they stepped out of Europe, so again, it's a catch-22. So either way, the problem is still there lingering. Then we've got the States where you actually do have the product of cryptos being able to do on a domestic level in some regulated states in the USA. So I would say that, again, the only solution that is viable and sustainable when it comes to all of this scope, whether it's traditional trading or cryptos, and I'll stop somewhere here so I won't waste the rest of the time, is, again, I would say is interbanking transactions. But the problem is when banks identify that the transactions are crypto-related, they actually strip us of the whole thing. I mean, they want almost pictures of us naked in the bathroom. So I would say that, again, it's an issue, but we should keep pushing. I think lobby groups have a long way to go. Again, we're a member of lobby groups in the UK and in Europe, in different lobby groups. I would say, again, the UK, despite the fact and the problems that they have with the Brexit, they're more proactive. They're addressing the issue with cryptos. And yes, I do believe it is the future of trading in terms of digital assets. I mean, it's obviously not going, at least based on my perspective, it's obviously not going to replace anytime soon our day-to-day payments, whether it's for a taxi or a car or whatever, because we still have a lot of AML issues to address. But it is going to be a digital asset, and that, I think, is the future of trading, which, responding to your question, CySEC has addressed that on a very good level as well, because it used to be just 20-25%, and now they allow cryptos on a much bigger scale to be traded through the CIF-regulated platforms.
Very insightful. The quick follow-up question on that, but okay, again, what would be the path of least resistance for a small startup crypto exchange to find a way to process credit cards?
Well, the problem that a small crypto or a small digital asset, let's say, company would have is the equivalent of a big one. But the question is, where do they start from? If they start in a jurisdiction where they are much more respected or, let's say, embraced, like the UK, it would make our life much more easier. And unfortunately, forward-looking jurisdictions like Estonia and Lithuania, which have tried to address this issue, and they're given what is so-called e-residency license for cryptos, again, is another problem, because those jurisdictions in the European Union, and I don't know, I mean, I don't know what's wrong with us as a European Union as a whole, because then we've got, you know, we say about not having any racist or nationalist interest, but then we come to European Union and we say, oh, you know what, Estonia, oh, stay away from it, Malta, stay away. I mean, come on. At the end of the day, there's a bigger issue to address as humanity. So PSD3 should take these things into consideration. And answering as much as I can your question about smaller cryptos or startups, I would say that starting out of the UK is the best way forward. It's the best jurisdiction to be embraced, and giving SEPA transactions as your first business in order to build a backbone where you can exchange with a provider, whether that's a bank, an EMI, or payment institution, AML manuals, policies, and procedures, is the best way to start through SEPA, because the payment schemes, again, through Visa and MasterCard are not very embraceful when it comes to this.
Also, just to add to that, I think in a few simple words, alternative payments. You mentioned SEPA, obviously, but there's e-wallets and piggybacking off some larger providers who are already in with the banks doing certain types of crypto, getting in with them and piggybacking on some of that approvals that they already got to use these alternative payment providers. And it's going to be hard. So, stay away from the schemes directly and use alternative payment providers. I think that's definitely an open door for that.
I think we're going to have to brace ourselves walking out of here, because if Visa or MasterCard here, I mean, stay away from the payment schemes. We're saying the same things, I'm with you, but they're going to shoot us on the way out.
Well, they need us also, so not that they care.
Yeah. All right. But still on the crypto side, though, crypto as an APM. Actually, that would be for then maybe. Up until there, it's been reserved kind of for the unregulated or badly regulated, just like we just said, in jurisdiction that people don't like and banks don't like. And so it's kind of shady, but we all agree here that it's here to stay. So let's put it this way, like, when will crypto become a legitimate way to deposit funds for a trader?
I think let's 3 years ago, we have just 2 or 1 integrations with 100% providers that accept crypto, Bitcoin. Now we have like 8 that pure concentrate on crypto payments, and around 36, it's actually sharp, it's 36, they accept crypto as one of the alternative payment methods. And this is growing because we do a lot of updates and upgrades almost every day, and we see that the volumes is also very high. It's 4 times this year only. And now mainly payment institutions, those are among our clients as well, so they are using crypto mostly for settlement. So USDT is now, I would say, second option, or maybe for many businesses, the only one option to settle funds. Let me be frank with you. And I clearly see that it's getting more legitimate. I mean, okay, it's almost impossible for small exchanges to get meets and like top tier companies, acquirers. Now it works. You see that Binance is connected. All top 10 first tier crypto exchanges, they are now accept Visa, MasterCard. They are legitimate businesses. So you can, buy easy. So I met also here some of them already. So, and also now the vice versa, payment industry is now using them for liquidity because they need it to settle funds for their merchants. Okay, still it's mostly about liquidity and moving money around because it's very convenient. But also there is another trend that's also a lot of fintechs, they added in your pocket you can buy Bitcoin and you can pay with this, and it's connected to your Visa or MasterCard balance as well. And that means that this is already legitimate payment option that you can use a USDT balance, Tether balance to pay for coffee. And those fintechs are driving force for that. And we clearly see that the demand for retail transactions, not only for high-risk businesses, is growing as well. It's steady, but it's always the adoption curve is like that. It's small steps, a lot of small steps, and then skyrocket, and I believe that it's during 5 years it will be a skyrocket, and maybe PSD2 will be in place because regulators always want to regulate everything, right? So this is their job, yeah, definitely we will see this something which is between what is now crypto and what is now, I would say, fiat money brackets, right? Because difficult to distinguish them. And but I believe that will be something as a next step, will be maybe a national currency. We'll see very soon. And that's national currency will be just right the same. They are legitimate and you can use them. Infrastructures already exist. I mean, everything is ready for this shift, I would say.
Okay, that's great. And so, while we are on alternative payment methods, maybe we can touch base on the most relevant APMs nowadays. You know, for the brokerage industry. We touched based on SEPA, direct debit, so forth. Like there are literally more than 250 APMs to choose from. So, Violeta, maybe you have a little bit of insight on you know, which are kind of the most relevant right now for maximum coverage?
Sure. Yes, sure. Thank you for the question. For example, we at PaySafe, we have 2 digital wallets, Skrill and NetTeller, and they can be topped up with a lot of alternative payment methods, 70 plus of them, such as Klarna or so forth, Trustly, P24, Ideal, GiroPay for Germany, Rapid Transfer, and so on and so forth, as well as Bitcoin, Bitcoin Cash, and Yandex Money for Russia. So, I mean, the list goes on. I'm not going to mention all 70 of them. But we do have specialists for the digital wallets within PaySafe, and they're able to help the brokers and the merchants really discover which alternative payment methods are relevant for their space. And regarding the digital wallets that we have in PaySafe, they're a one-tap, one-click solution, very simple and easy to use, you know, the customer base are basically the younger generation, especially Generation Z, who are mobile only. So, yeah, that's pretty much it. And these wallets are also chargeback protected so that there is a certain guarantee of the funds being transferred back in case of a dispute and so on. Yeah.
Yeah, that's very important.
That's in a nutshell, yes.
Of course.
Right.
And so, still on that side, maybe Aaron, you can, you know, brief us on the interest of the prepaid cards for traders.
Yeah, absolutely. So, which is my background, issuing and prepaid cards. Of course, not to contradict myself too much about what I said around the schemes in terms of crypto, but the prepaid product, which is through Visa and MasterCard, is actually something very progressive that the schemes have created. It's a lot more of a frictionless onboarding. It's a lot less, let's just say, hassle and requirements than it would be to open up a bank account or sometimes to even use the banking rails. So MasterCard and Visa have opened a really wide door for the issuance of prepaid to make payouts achievable in a number of different markets, in a number of different countries. And it's turned out to be a very effective way to make cross-border payments, global payments, and even mass payments out to whether it's countries, jurisdictions, or within industries that are typically harder to do in the traditional banking system, whether it's because you're sending US dollar or whether it's because it's the industry that's scrutinized in certain banks. MasterCard and Visa, through the issuance of prepaid, albeit it's a lower volume and value product, is something that they paved the way for an open door. And because of that, and because of the progressiveness around that product, which you can be very innovative with, unlike a debit card or a credit card, it has one typical traditional use within your typical banks. Prepaid cards, on the other hand, pave the way and allow for a lot of ingenuity and a lot of inventiveness, per se, on how to use that product. and which makes it an effective way to move money around and pay money out and give access to funds. So, of course, I'm all for it.
Yeah. All right. And real quickly, before we move on to the practical strategies, which is, I think, the most important part. Michael, real quickly, from the payment side, how did we kind of feel the pandemic effect on brokers?
Well, the first shock was when I entered the building. So that was the first time that literally I went to an event that we're crowded with people again. I mean, we're sitting here between us and we're wondering what's going to be the effect of these. I mean, this week is full of, in Limassol is full of events, and we're wondering what's going to be the end of this week like in terms of spread and pandemic. Well, in terms of social, I mean, we all know what the blow was. It was a big blow for all of us, and it still is. I mean, we're all afraid to actually reach out to each other, and I'm a very touchy person in a good way. Yeah? So I'm a very touchy and huggy person, and I mean, I get to see people and I go talk to them like, it's like, you know, I've got, anyway. But in terms of business, well, it's been, I think, talking on behalf of most of the industry, it's been kind. It's been very kind. Okay, in some industries, in some verticals where we have penetrated quite deeply and invested, like the tourist industry, obviously we had a big blow there. So the tourist industry has been blown really bad about this, and it's been hit below the line. However, some of the tourist agents have invested in their product, but you don't care about that anyway. So in the case of the digital assets, in Forex trading, business has surged. I think most of you might have seen it, and this is where I would like to stand. So the thing is that during this pandemic, it made a big surge, at least on our client portfolio, and talking with SciSec, which is the only connection we had during this pandemic period. We have seen a surge in business in terms of SIFs, trading, Forex, cryptos, name it. Anything that has to do with digital, online orders, deliveries, commodities, change of goods, just name it. Now, the question is, would this surge happen if there wasn't a pandemic? So my answer would be no. If you asked me 2 years ago before anybody knew about this pandemic. So is this growth going to keep happening? Well, I think we have seen, I mean, we've been in panels and we've been coming to the iFX, but at least talking on my behalf, in the past 10 years. I mean, if I compare today's meeting with 10 years ago, I was sitting in a blossom forest. Everything was blooming. It was spring. You were having new technologies, new software, new licenses coming across the globe all the time. And I'm not just talking about FX trading or dealing or whatever. I'm also talking about EMIs and payment institutions. Today, start from the Central Bank of Cyprus, go up to the ECB, go up to banking collaborations. Obtaining a new license is close to impossible. Even SciSec, which has been very pro-business and proactive, I think now they're settling everything down. ESMA has been pulling back and anchoring a few situations. So I think that the post-pandemic, I will talk more about the post-pandemic days that we will see a clearing, a defragmentation of the market. So a lot of companies are going to have to either become bought out, or they're going to close down, or being merged. So it will be a bit of a survival of the fittest, and the fittest in this case has, for me, two pillars. One is market reach. So how much market reach can you get? Unfortunately, the European market reach is no longer a situation. So you would have to go global. And the second one would be, how flexible are you? And that flexibility comes in anything from platform integrations up to regulatory. I mean, regulatory without getting yourselves into trouble. So these things, I understand that tough times call for tough measures and the brave to be out. So it will take a lot of bravery for, I believe, all of us, including payment providers, banks, or SIFs, or FX dealers, or whatever, name it. It's going to take a really brave step in order to survive the next 2 or 3 years coming, provisionally that the pandemic is behind us.
Yeah, definitely. All right. Practical strategies. So tips, tricks, how to make more money and lose less money to chargebacks. So we discussed PSD2. We discussed the impact. What I would like to discuss now is how do we make sure to have the least friction possible? To make sure, because there is the friction, you can actually have a parameter that asks for friction. If you're not sure about the client, you can either, there are plenty of parameters and ways to maximize the experience for the end user. So it would be like you have the MIT framework, with the ability to have the card on file and keep it and use it. Is that the best way to proceed for traders wanting to make deposits? Maybe we start this one with you, Ilko, and then Violeta, if you want to,
Yeah, I think it's nice that you reference merchant-initiated transactions because it's actually a great example. Initially, I think a lot of us, including myself, thought that it wouldn't be a great use case, but what we've seen is, for example, automated top-ups. So when a trader reaches sort of his balance reaches below 100 or 200 or whatever parameter you put in, you can do an automated top-up, which then qualifies as MIT merchant-initiated transaction. So that's quite a good use case, and we've seen some success in that. Then there's the more creative ways of doing things, like the one leg out. Of course, you don't have to comply with PSD2 if you're processing through a non-EU entity. But that, of course, has impact on processing cost, has impact on acceptance, and in some cases even surcharging. So not always the best way, but definitely one to look at.
And it works well. So, for example, the one leg out, when you have a company outside and an acquirer outside, which is the two reasons you need in order to be able to use that strategy, that actually works. You don't see a spike in 3D declines.
That's what I said, right? It's very much dependent on where that company is, on the reputation of that company, what the acquirer is. There's so many factors that play into that, but we've seen horrible failures, but we also seen some successful use cases. So it's one to explore, and it's probably best to do together with your payment provider or acquirer. Then issuer whitelisting is something that I think is worth exploring. What else? Yeah, I've seen some people trying Moto or doing sort of Moto type of transactions. Yeah, which is not recommendable. Yeah. Especially in terms of acceptance and compliance, and it's not the best. But I think, to your point and to your question, merchant-initiated transactions actually very doable and a great use case.
Yeah.
Yeah, I would agree. Absolutely. Yeah. I would only add that, with card on file and tokenization, we at Paysafe, we have what we call the customer vault, and this is where we store the customer credit card data as a token. It's all encrypted, it's safe, and it allows reoccurring payments, one-tap payments, in-app payments, or Internet of Things. And this is basically a great feature because the card details are automatically refreshed once the expiry date is over or the name of the person changes in one way or another, whatever. So it's an automated process.
So
I just wanted to actually ask, how do you guys see sort of chargebacks with merchant-initiated transactions? Is it something that requires a big education or a lot of terms and conditions? Have you seen an uplift or an unusual amount of chargebacks for merchant-initiated transactions?
I think initially there was, because like you rightfully said, there was a bit of a mismatch between terms and conditions and then doing merchant-initiated transactions. So it is of crucial importance that you actually amend your terms and conditions to allow for this, right? You cannot go into people's accounts without them signing up to it.
Yeah, I mean, from what I've seen with merchants in all verticals, as long as it's clearly stated in the terms and condition, first of all, less chargebacks, and then if there are chargebacks, representments are won almost all of the time.
You know, we've been talking about APMs for a while again. And obviously there are hundreds of APMs out there, and they're all trying to get the money through and make things happen. But I don't think that's the case again anymore. I mean, who does, from you guys here, I'll assume most of you are Forex companies, FX companies. So we touched an issue before about APMs in different jurisdictions. Who from here has, I don't know, let's say Russian traffic? Nobody? Really? I'll get your cards later and I'll check the volume. I'll check the volumes. But why am I asking this? I mean, just name the jurisdiction that is outside of the European Union, because you're all aiming towards that. As we said, the European Union is too fragmented, so we're looking into other countries in order to get more business and more money through and profitability. So let's assume, for argument's sake, that you've got Russian business. So do you think that by having a solution like Yandex as an e-wallet, that's going to be enough, or a Kiwi or something like that? Is that going to be enough? Well, I don't know. If you're asking me on today's perspective, you can answer it. I'll tell you my opinion. I would say that on today's facts, I mean, you cannot even get that business anymore because there's a new regulation now in Russia for Forex companies. So if they see transactions going out, your head is on the table. But, I mean, please elaborate further on that, because it will help to understand if APMs connecting onto them is actually a solution, or is it just an old solution that needs new tricks?
Yes, actually this story, particularly in Russia, started in this year, in New Year. And I believe it's from Telegram chat, you know, everybody knows that. And so actually a regulator blocked everything. So settlement is not possible, and you can only set up a company in Russia if you would wish to do it, you know, legally, and obtain a license, and you can go on. Okay. But we clearly see that a lot of acquirers east and south from Russia benefit from that, right? Because they still have an option to process payments in Russian rubles as a processing currency. And a lot of banks outside, even in Europe, they have still a processing currency in Russian ruble, and they can do it. And yeah, obviously Kiwi and Yandex benefit from that, especially Kiwi. So what we see on our side. I just would like to add to the subject of APMs. We see that our clients, they previously have like a long list of APMs, and the client has to decide which APM is relevant, like Violeta. And many people don't know about Violeta because they are not in Latin America or whatever, right? So we clearly see that's now merchants or FX brokers, they started doing like localities, and they were listed like only relative payment methods that by IP address or the country are somehow they usually based on IP address, right? And it's better to see like relative payment options like 1, 3, 2 than to see like 50. And I know that big companies, they're working with like 200 payment methods or 300 payment methods. And also when it comes to be successful in every part of the world, so you have to be as close to your customers and understand their behavior, what are their, how they are paying, where, and so on. So I believe it's is to be successful with IPMs, you have to provide relative payment options, most common, and okay, if behind the corners there is compliance and everything, okay, but in general, we clearly see that it really helps the business. I mean, what is, for example, Europe is really fragmented. What is in Germany, like 50% is interbanking, or open banking, sorry, and Shileva 24 is the most popular in Poland. We are neighbors. If you don't have Banco Contact, you are not successful in Portugal, and so on. I mean, like it's everywhere. There are a lot of emergent payment options, and there are huge aggregators. You see the success of Rapid, which has. When I met 2 weeks ago with those guys, they told me that like they have 500 or something, and a year ago they have like 200. What is happening? I'm like, the experience of using payment services is getting more and more fragmented.
Very true, very true. So we have like 5 minutes, and I really want to try and take some questions from the audience. So real quick, I want to finally touch base on all of the fraud prevention and all of the tools out there. Sometimes it can be a little bit confusing. We have, VMPI, Order Insight, representments, CDRN, RDR now. It's going to be the big game changer where you actually have a budget for refund, open note with all of the issuers that we can actually refund on your behalf. So what is the most relevant? We want to give the best. What are the most important tools for a payment team in a broker who wants to reduce chargeback, improve approval ratio, and be on top of things? Like the most important latest tools nowadays. Maybe you want to start, Michael?
I got the hot seat today, huh? So
you're next to me. That's
I can feel the vibe. All right. Thanks for giving me the opportunity. So closing is 3 minutes left, guys. Not much to say. Yes. Each jurisdiction, again, I think stands the same things with APM. Unfortunately, even Europe is not harmonized in terms of KYC and onboarding procedures. So if we're talking about the traders, it depends on what platform you're going to be loading them and on what payment solution. If that's going to be a Visa product, then it's MIDs that you're going to be issuing to the provider. If it's going to be APMs, then you need to do reliance on an APM. And if you're a European regulated entity, then it's a whole new animal. You need to rely on them for their manuals and for the KYC done on it. So I would say that there is no one straightforward answer. Again, it's a tailor-made answer. Everything is too complex today. So based on the jurisdiction that you need to operate, you would need to do twists and turns based on that jurisdiction that you want to get it. So I would say that once again, in Europe, with high traders, with high rollers, or with your traders which are spending high amounts and they're frequent, the best way of doing it is to actually onboard them directly onto the payment provider through the SEPA schemes or whatever else method you're going to be using. If it's going to be cards, it's straightforward again in Europe. If it's outside of Europe, then you've got other jurisdictions. Guys, there's no one straightforward answer from me on that one.
Network tokenization, maybe?
Still, that wouldn't be a solution for a universal APM solution, because you would be looking at different APMs per jurisdiction that you'll be getting traders, and then you'd be looking at different legal entities being boarded in a group structure for an FX company. So an FX group would have European regulated entity, they would have, I don't know, maybe a Russian if they can obtain one, they would have a UK one. So it depends on where you're trying to get traders. And then when you're getting from Asia and from non-regulated or non-third equivalent country jurisdictions, then where do you get the license from that one? And do you have payment agents? And you guys know the story and the drill. So I wouldn't say there's a one fixed solution. If it's the Visa schemes, again, old news, I would say IP and card verification and BINs and 3D security is the only way forward. But again, everything today is more complex than it used to be. It's not like, guys, there's a complete solution, upload the documents there, it's automatic, and it's a universal solution. Based on the country you want to go, based on the legal entity that you actually have, it's going to be a whole different new animal. And that's the only way to protect you and us. I mean, it's a catch-22.
Totally. Anyone else, on yeah?
I would only add the rapid dispute resolution is really a game changer, a good tool to have for merchants and brokers.
I think so too.
It helps reduce the chargeback ratio to a great amount. And the way that it works is that the merchant himself, he sets a threshold, like let's say $20 or something, and then all transactions amounting up to $20 are automatically sent back to the customer without any dispute. The merchant doesn't have to supply any documentation and anything else, and this doesn't count to the chargeback ratio.
Yeah, but on the other hand, like being on the broker side now, isn't it just,
They have like 300 plus, so doesn't work, right?
Exactly, that's what I would say, yeah.
Values are too high,
Our experience is that our clients are using several services. We obviously know them, right? So, and actually it ranges between 5 and 25%. So the best result is like quarter of chargebacks can be you receive a notification and then you can react, and usually with refund. So in this case, you can lower the chargeback ratio, but it's maximum what we experience is 25%.
Got it. All right. We're on time. So real quick, if anybody has questions. No questions?
We were too boring.
No, we gave all the answers.
Yeah, that's probably why. Awesome. Thank you, everybody.
Thanks, everyone.
Thanks.
Thanks.